everyone, welcome to part 2 of this optimal imbalance video. In this presentation we're going to focus on easy imbalance, which is part of our optimal order flow pack. Easy imbalance color codes your bars according to multiple imbalance conditions, which makes it simple to bring the power of order flow to your charts without overloading them with numbers and plots. If you haven't already done so, I suggest watching part 1 first to familiarize yourself with the underlying concepts of imbalance and how we've improved signal filtering. So let's have a look at a recent market session. Up on screen we have a simple chart of YM, the June contract for April the 29th, 2022, and we're using the US equities RTH session. The time zone is UTC, which for those of you in the US is Eastern Time plus 5 hours, so the session open here is 09:30 Eastern Time. A brief rundown of what we have loaded on the chart. As usual, we're using optimal Ninja normalized bars, which are equal-sized Renko bars specifically designed for our order flow tools. They use real opens, highs, lows, and closes, and because they split market moves into normalized chunks, they make comparative analysis much simpler. The circle plots on the bars are made by optimal imbalance, as described in part 1 of the video, and just to give the bars some context, the white hash line is the midpoint of the session, and the yellow hash line is the open of the session. And of course we have easy imbalance loaded, which is coloring the bars. You'll notice straight away that some of the bars are grey. These are bars without imbalance signals. They can be thought of as neutral or low aggression bars. Generally, I'm wary of neutral bars since, as mentioned in part 1, we want our reversals and trends to be characterised by strong directional pressure. So these 3 bars around the open are not the best signal bars. Neither are these 3 bars, nor are these 2 bars here. It's generally better to wait for a painted bar before entering. So what do these painted bars mean? Firstly, let's explain a little bit about how easy imbalance works. Easy imbalance analyzes imbalance plots across the last 2 bars, and it analyzes imbalance and absorption. Imbalance we covered in part 1. Absorption is simply when an imbalance level is rejected because price ultimately closes in the opposite direction. So for example, on this bar, sellers pushed price down. You can see the large sell imbalance here, but were absorbed by buyers stepping in and pushing price back up to close above that sell imbalance level on the following bar. So we had sell absorption across these 2 bars. And we also had buy imbalance on the current bar, that's this level here. And when we have those 2 conditions together, that's sell absorption on the prior bar plus buy imbalance on the current bar, optimal imbalance paints the bar with a lime green outline, which is our strongest 2-bar up signal. The corresponding down signal is a red bar outline. For example, on this up bar we have buy imbalances, and they were all absorbed by selling when price subsequently closed below them on the following reversal bar. And on the reversal bar we have sell imbalances. So we have the combination of buying absorption on the prior bar plus selling imbalance on the current bar to trigger a red color. An important point to note is that price has to close below the lowest of these buy imbalances for the signal to trigger. You'll see here we have 3 buy imbalances close together. These are sometimes referred to as stacked or clustered imbalances. If price did not take out the lowest of these imbalances, easy imbalance would paint the bar orange, indicating that the setup is weaker. For instance, on these orange coloured bars, we have sell imbalance on the current bar, but no buy absorption on the prior bar. So although we have selling aggression, we don't have buy absorption. And on these tan coloured bars, we have buy absorption on the current bar or prior bar, but no selling imbalance on the current bar. Easy imbalance checks for a total of 14 imbalance situations, that's 7 bullish conditions and 7 bearish conditions, but you have the option to select only the ones you want to see and of course change the colours. You'll be relieved to hear that I'm not going to run through all these conditions now, except to say that there is also the option to paint the body of bars when exceptionally high imbalance situations are encountered. So this bar has exceptionally high buying imbalance and this bar has exceptionally high selling imbalance. This is a sign of strength early in reversals, or when seen in trends can be a climactic warning as it denotes very high levels of aggression. So enough of the theory, let's take a look at how we can use this information in practical trading. I should reiterate that easy imbalance and optimal imbalance are part of our optimal order flow pack and as such are designed to be interpreted alongside other signals and not in isolation. So what follows is a simplified analysis to help aid understanding of imbalance and not a full market commentary. With that said, let's get into it. Firstly, a quick word about the bars. Because all bar sizes are equal, I prefer to characterize market movement and therefore risk and reward in terms terms of bars and not ticks or points. For example, on this rally, rather than thinking of the market as having risen 215 ticks between these points, I prefer to think of it as a 3-bar up move off the lows or a 2-bar up move off the open. Or if I take a trade and the subsequent bar closes in my favour, I prefer to think of that as a +1 gain. It's only a slight shift in characterization, but it's a simpler method of thinking about markets where all moves are seen as relative to each other. Essentially, it's a modular approach to analysis, and I strongly advise adopting it. Anyway, back to the chart. Generally, I stand aside on the first bar of a session as I want to establish some context to the signals, and there usually isn't enough information at the open to do that. And since levels of market noise are increased, signal strength is diminished, so we stand aside on bar 1. As mentioned earlier, we're staying away from neutral bars, so none of these bars are signal bars either. Bar 5 is tan-coloured, meaning by absorption only, so it's a relatively weak down bar, and it sits in this 3-bar trading range above this near side low, so I would stand aside on this bar also. Bar 6 is the second attempt to break the session open and the session midpoint, and is also a higher low after the weak bar 5 down bar. In terms of imbalances, we have stacked buy imbalances and sell absorption on the lows, and we also have high imbalanced volume, so the body is painted. All this means that the bar scores highly as a long setup. And if you went long there, you could certainly have held through these strong bull bars to target 33,800 or the prior session close, or you could use a trailing stop. Bar 9 we examined earlier. It was a strong red reversal bar of 33,800 and the prior session close, and it closed back below the opening swing high. Also, we have a lot of overhead imbalances that the market would need to push back through for this trade to fail, so all this means the bars score highly as a short setup. And then we had this strong downtrend. Now, it's tempting to look at these moves in hindsight and think, wow, I could have shorted here and exited here and made 250 ticks. Well, yes, if your exit strategy is to wait for reversal bars, that's true. But here's the truth about trends, they always try to shake you out. We could give this trade to 10 different traders and we'd have 10 different exit points on this sell-off, even though everyone would believe that they would actually exit here. This is the reality of trading. This is why it's crucial to develop a rule-based methodology for exiting profitable trades rather than emotion or intuition. In the trading guide, I suggest targeting round numbers, risk multiples, say exiting at +4 bars profit, or simply using a trailing stop. Bar 16 we looked at right at the start. It's a strong coloured bull bar, but I would not be keen on this as a long entry. Why not? Simply the context. It's a first reversal bar in this multi-bar sell-off below midpoint, and since we're an hour or two into the session, this is significant. So I would consider a second leg down, or at least a retest of these lows, to be fairly likely. Of course, one should never discount anything, but if one was ranking subsequent price action in order of probability, a V-shaped reversal sits further down the list than a brief rally and resumption of the downtrend. Often you'll have a pullback to session midpoint in situations like this, but if you did go long here for that trade, the neutral up bar on bar 17 is a warning of poor follow-through. So I would certainly not hang around in that trade. You might want to exit at +1 and certainly on the following reversal bar. Bar 18, although it's a relatively weak coloured down bar, is a more valid short entry than this earlier one because we now have this strong bearish context. So given this powerful sell-off, it's worth shorting any upside weakness, and the lack of buying enthusiasm on the prior bar also strengthened this as a short setup. If you took this short, these two neutral bars might prompt you to tighten your stop or even exit, as they're not indicative of sell aggression. In fact, there is a distinct lack of power in this leg compared with the first leg, so we can probably expect some sort of bounce coming up. Bar 24 has buy imbalance and sell absorption, but the placement is poor. It's not reversing off any meaningful level, and again, it's crucial to consider the context. By now, it's a major trend reversal attempt, and most major trend reversal attempts fail. It's simply a better proposition to wait for further short setups or to stand aside. Now, I can tell you there will always be a certain type of trader that takes these trades, largely because they're drawn by the appeal of being a smart fellow and capturing the exact bottom. Even if you are a natural contrarian, I advise leaving major trend reversals to others and instead embracing the probabilities. Over the longer term, probabilities are your best friends in trading, so I would simply let this 3-bar move go. Bar 27 is neutral and bar 28 is a powerful down bar, but you'll notice that it's a shaven bar. By shaven, I mean that it has no upper tail or wick. These are poor entry bars. I explain the reason for this in our trading guide and why it's better to wait for a deep pullback into these bars before entering. And since we've run out of bars, that's a good place to conclude this video on optimal imbalance and easy imbalance. My name's Richard. I hope you found this presentation informative. For further information, check out our website at optimalninja.com, and as always, all the best with your trading.